Hey, what's going on, guys? Today I'm going to go over SBEV and the trade today. So this was a gap and crap setup. You can see basically popped up, what is it, like around 8 a.m. The PR came out, they're, putting their water out in Walmart. I mean, the news is fine. It's not terrible news, but, um, to me, news doesn't matter as much. Um, unless it's like something crazy. Um, just statistically, on these gappers, it doesn't matter a whole lot. Anyway, we get this nice gap. First thing I'm looking at is, you know, does this give back, more than, the more than 50% of its pre-market range? And in this case, it did. It gave back, probably like 51, 52%. So it was very close, but it still fits my criteria. And then usually what I'm looking for is a push off of the open, um, risking pre-market highs. And we got a push pre-market, which I had entered, and some of these you get one final push pre-market, and then it fades off and then dies, and then that was it. Um, but sometimes you get a much better squeeze after the open, and in this case that's what happened. Unfortunately, in this in my trade zero account, I was already in, so I had already set my stop loss, and I was just waiting it out. Um, you can see my entry here, and then it kind of took a while, but after 11 a.m. it started breaking down, and that's when I kind of started covered a little bit, and then covered the majority of it, at 146 probably. Um, so maybe average of like 148 cover. Target was 140, but this went a lot higher than anticipated. So you kind of have to take that into consideration. If it goes extremely close to your risk, it's probably not going to fade back all the way back down either, right? Because it's very unlikely for it to do the entire range on a fade. So you take that into consideration, move your targets up a little bit, and but more so just kind of use the price action to see kind of where it might find support, and that's what I did. And you can also cover pieces along the way. That helps me, and it should help you to stay patient. And you can see this one later in the day reclaimed. So if you hadn't covered any and you were waiting this out into the close, then you kind of got probably out for break even or so. So that could have been annoying. Um, I'll show you guys my. So this was on my Trade Zero main account, and then I took a smaller trade. Same thing, but as you guys know, I'm using better trades, better risk to reward with my other account, seeing how that goes, and um, you can see, I'll bring this in. Um, you can see here that, okay, I just don't want my account number to show up. But you can see, I entered with extremely high risk to reward, over probably mid 180s here. Very tight risk at pre-market high, and then my last covers were at the bottom. So this on this account, this trade was perfect. Um, couldn't have gone any better. Yes, I could have probably not covered pieces, but because I was in on the same trade on both accounts, I didn't want to take a full size loss on this account and then a full size loss on the other account, because I was in on the same trade. Now, if this had been two different tickers, two different trades, then yeah, I would probably have been patient on this one without covering pieces along the way. But I guess it was more of just to kind of keep myself safe, was kind of the mentality. Um, the other thing, if we pull up, um, if we pull up, where's kind of the fundamental side of things. If you go on financials, actually, let me pull up more accurate, which is going to be BAMSEC. Um, you can see that, where are we at? Okay. You can see that this company, right here, net loss, they lost $12 million um, as of September 30th of 2021. So this company is not profitable. So that kind of gives me more assurance of a company and that's not doing well and that they shouldn't really be up. Sure, they have started selling some of their water in Walmart, which was the news, but at this current moment in time, they're an unprofitable company. So really, you know, there's no reason for this company to be up 50%. Long term, once they start bringing in revenue, if the news is actually good and if they start making money off of this, and they become a profitable company, then yeah, that's a good thing, and that's something that would be worth a 50% increase in the stock price. But at this current moment in time, it's not. So that's kind of how I go about my fundamental research. I'm not a pro. I'm not, um, I only know surface level fundamentals, and this year I have a goal for myself to really dig deep into these things, and um, not even just financial statements, because it's not too hard to understand what's going on, but to dig deeper into the motive of a company and kind of why they're pumping their price up and how that will affect the day's trading, the price action, and things like that. So that's kind of my goal for this year. Um, but in terms of this trade, that's how I traded it. It's basically, it's a rinse and repeat pattern, guys. I do the same thing every single day. Um, it's not really rocket science. If you're having issues, and this goes for myself, when I have issues with, you know, with with these trades, it's because I'm one, either in with too much size, so that makes me uncomfortable in the trade, and I might make decisions on bad covers, trying to cover into a little pop. Um, but if you trade with a size and with a mentality that you don't really care what happens today, trading becomes a lot easier. If you try to think of things big picture, think of, the next 100 trades. I'm trying to think of, you know, where am I going to be by the end of the year? That's what I'm interested in. And one trade that does not work out, like we had, what was it, Hoth, last week or the other week before, didn't work out, but I'm still deep in the green on the month because, I'm playing this long term. I try to, if I take a loss, the best thing to do, honestly, is to just accept the loss and not try to make it back, even though there's a chance that it might come back in, and fail after it breaks through for market high. But at that point, you're trading emotionally and you're trading poorly and you're revenge trading. So best thing to do is, take that loss, move on, come back the next day. And there's, this week, this is already the second day we've had a trade. So this week started off nice. Pre-market, it seems slow, but there's usually always something that sets up. And the other ticker today was PHIO, which offered a massive unwind. Um, in terms of, like, pull it up, in terms of maybe price and range, and well, yeah, in terms of the price of the stock, sure, it's $1, and it seems like, okay, what, you maybe made 15 cents on it. It seems like not a lot, but I trade off percentages and off of percentage of the range. So if you get in at, let's say, a dollar, yeah, $1.20 is a reasonable entry. you risk 10 cents and then you make, let's just say you did make it all the way down, you make all the way to a dollar, you made 20 cents. It's all a matter of how much you size in. And, if you're sizing in relative to your dollar risk that you've already predefined, then, it really doesn't matter the percentage of the range, or the amount of cents that you can make on the stock. It's all about the percentage. So, you'll either need to take more shares to accommodate for that or less shares if it's a wider range and things like that. So to me, it doesn't necessarily matter. The only reason I wasn't quite sure is because I had a little bit of, maybe I was just a little bit uncomfortable because of Hoth the other time where it was also a dollar stock. It, gapped, below $1.50 and then it ended up squeezing, but this one didn't. So this was nice, but yeah, this is actually turning out to be a long video, but hopefully that was a good explanation on today's trade.